Hello, hi traders, what is going on? This is Chris at Verillo Trading. Welcome to this video. In this video, we're going to talk about 4 trading indicators that I don't use anymore in my trading. I cut them out, I threw them out, I threw them in the garbage, I pitched them into the garbage like that. No, that's not true. So actually what happened is, over time you develop as a trader, things change, you use different sort of variables, and basically the variables you use that I've used for trading have changed over time. And I'm also glad to say that for probably a year and a half to 2 years right now, I've been using pretty much the exact same thing and just slowly developing upon that. So that's awesome. And I would say these days, summer these days have been the most consistent in my entire trading thus far since I started trading. So it's been pretty fun. It's been interesting. Not necessarily, well, yeah, it's fun. I do enjoy trading, but it's interesting to see certain things panning out. Okay, so in this video, guys, 4 indicators I don't use anymore, and that's it. So if you guys enjoy this content, you can always leave a comment, press the like button, and I also created a new page here, which is a Buy Me a Coffee page, and you can just search up buymeacoffee.com/Verillo Trading, but I'll put the link in the description as well. So go ahead and read this. I created just a short bio for the YouTube channel, and if you want to give a one-time donation, if you appreciate what I do for you guys here on this channel with all the tutorial videos, that's a quick way of supporting the channel because we do not sell any services right now. I don't really offer you guys anything. So if you want to support the channel, that's a new way you can do that. Awesome. All right, 4 indicators. The first indicator that I do not use in my trading anymore in the way that I used to use it when I first started trading is the moving average. And let's go ahead and look at a really old video on my channel right here. Okay, so you can see this is a very typical way of displaying a moving average on a chart. These are basically exponential moving averages, the 12 and 26 in this case. Anybody who watches another YouTube channel named The Chart Guys will know how familiar that is because I stole that directly from them because at the time, basically all through 2019, I was binge watching The Chart Guys and basically getting a good background and developing my background in chart trading and technical analysis. The reason I don't use them now, I don't want to go ahead and say I don't use moving averages at all because the moving average itself, all it is, it's an average, right? So if you want to take an average of something, you can use a moving average and apply the moving average to whatever you want to take the average of. And in fact, I do use that in one of my indicators today. The main thing about these types of indicators is that they are a lagging indicator. They are based on the data from the price bars, and they only really get their values when the bar has closed and moved on to a new bar. Well, one thing you'll probably notice with moving averages is because since they're always lagging a bar behind or two, when the market is moving down towards your area, you'll often see that the price will undershoot the level of the moving average. And then once the bar is closed and moving on to the next bar, at that point you can see that the moving average level met up with the low of the bar or relatively close to the low of the bar. So, there's an example of a lagging indicator. Now, it doesn't mean it's totally useless. I just find that I have other indicators in my trading that give me a better picture about the trading that I do right now. If you can read price action, you could, arguably remove most of the other indicators that are derived from the price action. And that includes, all those technical indicators, whatever it is, stochastics, RSI, moving averages, MACD. Yeah, the moving averages in this scenario, I don't use them like this anymore. I don't think they're necessary. You'll often hear people talking about the 50-day moving average, the 200-day moving average. Look, at the end of the day, price action and order flow trumps everything. And if I want to get an idea of the market sentiment, I'll go ahead and watch some of these clueless people on YouTube talking about, okay, the market's below the 50-day, now everybody's bearish. Now it's above the 50-day, now everybody's bullish again. Like, look, I don't really believe in any of that stuff. But at the end of the day, look, if institutions are executing their orders when certain things are happening, then you're going to see them on the tape anyways. You're going to see the orders go through. You're going to see the market move. So for me, if the market's above the 50-day or below the 50-day, it doesn't impact my trading at all. Whether it's a swing trading strategy, a longer term investing approach, or even for day trading, intraday trading, I don't have any strategy that relies on a 50-day or a 200-day moving average. But it's also because I haven't looked at them in depth enough to determine if there's actually edge in using that. So that's one thing as well. Main thing is, I don't use it in my trading, and that's it. And I just realized there's a time and sales just lurking on my screen right there, and that's absolutely fine. Okay, so the next indicator that I do not use in my trading anymore, it's kind of similar to what I was just mentioning, which is another lagging indicator, which is the RSI. So there's an example of an RSI right there, that orange line right there. Now, the RSI, I guess, is what they call a momentum indicator or relative strength to, I guess, what is the broad market. I don't really know the true and tried definition of it, but what I do know is that it's a lagging indicator, and that, in my opinion, I don't believe in oversold or overbought that much. I have some certain principles and concepts about price action and the velocity of the price action that give me a better indication of oversold or overbought, or if a market's extended, or is it extending into a particular area that I might be looking to do business in. The RSI does not help me with determining, or it never helped me determine if a market was oversold or overbought. I know some traders, like for example, the chart guys, they use the RSI, and sometimes they use, past historical RSI levels to gauge what is the likelihood of the market, I don't know, stopping or becoming more oversold or not. Anyways, I don't use it because I believe that it lags the price. And for me, price action and order flow trumps all, and supply and demand, basically. And that's going to sort of bring us towards the end of the video. I'm going to tell you guys about the number one indicator, which I believe is greatly misunderstood in the trading world. But before we get there, let's talk about the VWAP. That's the next one here. So again, the VWAP, the volume weighted average price, that's an indicator, again, very popular. A lot of people have it on their charts. I personally have never really found consistency using the VWAP. I've never really found anything interesting about the VWAP. I do not really believe that the VWAP is support or resistance. Normally, if it is, it probably lines up with something that is more relevant, like an actual area of an imbalance of order flow, or an actual area where there was a supply and demand imbalance, which is the same thing as the first thing I just said. So, if it lines up with that, it's probably going to be an area where there's going to be a bit of a bounce. It doesn't really give me much idea about the market sentiment, about, where traders are positioned. You might have an idea, okay, maybe there's going to be some stops below the VWAP. You'll have a flush below that. But even that for me is, I don't know, I never found it good enough. And so take a look at this chart right here. Here's a chart, 30-minute chart, and we have session VWAP. I believe it's a session VWAP. And you can see how, it generally trails, it follows the price pretty well. Like I said, it doesn't really interest me. It doesn't really have any impact on my trading. It doesn't really give me an idea of where the market is likely going. It doesn't really give me much info. I don't really know how to use it. That's why I don't use it. I took it off my chart completely. I don't use the VWAP, guys. Now, the final indicator here, let's talk about it before you watch this advertisement. All right, guys, if you made it this far, you made it for the best part of the video, which is the final indicator I no longer use in my trading, and it's going to be the support and resistance. Okay, guys, so most of you guys who watch technical analysis videos on YouTube, or maybe you're relatively new to trading, or maybe you're very experienced in trading and you still use this method, maybe you won't be happy to hear what I'm about to say to you. But I believe, well, first of all, that highs and lows of bars under most circumstances are not by any means support and resistance. In fact, they are not at all support and resistance. Unless there's a reason why you can prove that it would be support and resistance, they are not support or resistance. You can't just go ahead and start looking at a daily chart and saying, okay, that's support right there. That level where the market stopped right there, yeah, that's support. Okay, good. So when the market gets there, I'm gonna buy it. Now over here, down here, these levels, that's support, and the final one on the bottom here, that's also support. That is not support. That is not support. Let me tell you why. Because all that is the lowest traded price that is traded on that bar. It has nothing to do with the amount of trades that went through that allowed the market to go up at that point. It had nothing to do with the trader's intent, which resulted in the market lifting up at that point, which just so happened that trade at the bottom, that last price at the very bottom, happened to be the low of the day. It has nothing to do with support. What support or resistance is for me, guys, is supply and demand areas. Areas where there is clear initiation of supply or demand into a marketplace. Now, areas of support or resistance, it's never a line. It's always a zone. None of these three bottoms here are support. This low here is not support at all. However, these highs right here on the NASDAQ, these highs are a form of resistance that I would call a poor high, because as you can see here, we had a try to close above the high of that bar, which was on April 25th, 2022. And then you can see here, it tested it once and failed, basically top ticked it, and then another time top ticked it and failed. So for me, that is an area of resistance. It's what I call a poor high. It's totally a misconception. It's totally a myth. It totally doesn't make any sense to say that the low of a bar, the lowest traded price of a price range, is an area where there is support. What support is basically it's either going to be traders that intend to buy, that there's so many traders that there's not enough sellers to meet that demand, and that in turn results in the price going higher. That's a form of support. Or just simply there's not enough sellers to hit into the bids to move the market lower. Basically, that is seller exhaustion. That also is a form of support. In a way, you could logically say, okay, because the market didn't want to trade there, it was support, but there's really nothing indicating to you that if the market goes there again, it's going to be support again. Okay, so you need more factors that go into, determining your areas of supply and demand. That alone is not enough. So probably I've shown you how I use supply and demand zones in a couple other videos, but that's not the point of this video. I just wanted to show you guys 4 indicators that I don't use in the same way that I used to use them. So if you found this interesting, press the like button and I'll see you guys in the next video. Thanks for watching. Take care. Cheers.